Welcome to Business Weekly. Lawyers for the European Union have concluded that a financial transaction tax is illegal. According to the legal advisors, the proposal breaks international laws and the EU treaties. Meantime, China became one of the world's top 3 investors for the first time last year. Its foreign investment soared to a new record, providing more evidence that the Asian giant is rebounding. And China is the world's largest smartphone market, where Apple is aiming its new gadgets. We'll discuss all that with Nejra Cehic from Bloomberg later in the program. Let's start with the latest news on the so-called Tobin tax.
A plan to tax financial transactions in 11 European Union countries from next year has hit a major snag. EU lawyers say, as proposed, the measure is illegal as it breaks treaties and international tax law and would distort competition. This may be the final nail in the coffin for the tax, which is being challenged by Britain in the EU's top court on the basis that it would affect transactions carried out beyond the borders of countries that sign up for it. However, the lawyer's opinion is not binding, and Germany says it does still want the levy to be introduced quickly.
The lawyers say there are problems with this levy. What's illegal about it, and could it still be introduced after this verdict?
Okay, so what's been proposed is a financial transaction tax for 11 countries. The European Commission has basically put forward a broad-based tax on stocks, bonds, derivatives and other trades that could be collected all over the world by France, Germany and the other countries that have signed up so far. Now what this means is if you're a bank based in Germany, Germany could collect tax on some trades you make in the US, for example. Now lawyers for the EU Council are saying the tax plan goes too far. It exceeds the jurisdiction of the participating countries. They say it infringes on the taxing powers of countries that aren't participating, and that it's discriminatory and likely to lead to distortion of competition, which would be detrimental, they say, to countries not participating. But the legal service of the European Commission, which proposed the levy, is standing by the plan and will offer a rebuttal. So this debate is likely to drag on.
For the first time, China is among world's top 3 investors. The country's favorite location was Hong Kong. The US was also increasingly popular. At the same time, government officials say that China is interested in various sectors and aims to increase overseas investment even more in the future.
China's foreign investments have hit a new record. Last year, the country jumped into the top 3 of the world's investors for the first time, behind Japan and the number 1, the US. Leading the charge are private companies, with the Sovereign Wealth Fund, the China Investment Corporation not far behind, using part of the government's huge foreign exchange reserves. Beijing has been encouraging Chinese companies to go international, with the result that foreign investment has risen from the equivalent of 52 billion euros in 2010 to 66.5 billion euros last year. Speaking at the China International Fair for Investment and Trade, the deputy head of the country's International Chamber of Commerce for the private sector said Chinese investors' outbound investment used to focus on traditional industries, but now they've shifted their focus to both traditional and newly emerged industries. Such development momentum is very strong, especially in the advanced manufacturing sector and high-tech industries. The Commerce Department says overseas investments set to grow 15% this year through deals like the just-approved €3.5 billion takeover of America's Smithfield Foods, the world's biggest pork producer, which is the largest ever Chinese acquisition of a US company.
The government has been talking a lot about rebalancing the economy, but it is still heavily dependent on exports.
Alexandra, there's been a lot of data out of China recently, and it's showing a pretty mixed picture. Export growth in August was above economists' expectations. It was also the second month of export growth. But, you know, we'll only really know if the economy is still heavily dependent on exports when we get China's growth numbers for the third quarter later this year. And then we can see if the export growth has boosted GDP. Now, what the government's trying to do as well is rebalance the economy away from investment-led growth towards growth led by domestic consumption. And there are signs that this may be happening, even if it's happening slowly. Retail sales, they increased in the period from January to August, topping estimates. Now, that's a sign that Chinese consumers are buying. And a lot of people are interpreting all the different data positively at the moment, taking it as a sign that China's economy is recovering from its slowdown. But the big question is if the recovery will be sustained.
China's telecommunications sector has been a target for many foreign companies. Apple is eager to get access to its hundreds of millions of smartphone users. The US company wants to entice Chinese customers with its new low-cost iPhone, though it looks like Apple has a different definition of low-cost.
Cheap and cheerful, not words usually used to describe the Apple iPhone, but that's how the tech giant is marketing its new 5C model. In the face of falling profits and increased competition, analysts say Apple needed to do something new.
iPhone 5C. It comes in 5 colors: blue, white, pink, yellow, and green. It starts with a large 16-gigabyte configuration at a price of just $99.
And that's not all. For the first time, Apple has unveiled 2 distinctly different handsets at the same time. The iPhone 5S is aimed at the top end of the smartphone market, with new features for users including fingerprint ID. But the more basic 5C model may not be all it seems, as journalist and new technologies expert Paolo Ottolina explains. The 5C is actually not so cheap, because in the US it'll be sold for at least $549 for those not subscribing to a contract. So it's hardly a true low-cost model. But it could help Apple challenge important markets such as China, where sales of the Google Android are rising. But will it be enough to tackle the growth of the other competitors, Samsung first of all? If we look at the stock exchange reaction, I'd say no, but the next few months will tell us more.
There has been lots of discussions over Apple's new handsets. Could the company conquer China's market with them, and what happens if it fails?
Well, it's certainly taking steps to conquer China's market, not just with a cheaper model, but also because it's offering its newest iPhones through China's smaller wireless carriers. And according to a person with knowledge of the matter, it's close to securing a deal with China Mobile. China Mobile has a customer base, get this, more than twice the size of the US population. Now, some analysts say this deal will be critical for Apple's campaign to regain market share. So, Apple's getting access to China's wireless subscribers, almost 40% of them in fact. But will Chinese consumers want to buy their phones? That's the question, because the cheaper iPhone 5C will start at more than $700 in China and compete with handsets sold for as little as $100. And it's those very handsets that have helped erode Apple's market share. Now, some analysts are saying that the iPhone just isn't cheap enough, and it'll be a premium product in China. So if these steps don't work, well, it certainly will have consequences, because China's important for Apple. It's one of its largest markets.
That was Nejra Cehic from Bloomberg. Thank you, Nejra. That's it for now. Looking ahead, Eurozone inflation rate for August is released on Monday. UK's inflation figures and European car sales data are out on Tuesday. Spanish retailer Inditex posts its quarterly results on Wednesday, which is also when the Fed's Open Market Committee announces its much-anticipated monetary policy decision. Thank you for watching, and see you next week.